The unknown unknown, it seems to me, is the trust in the US-led international order, the bond market, the dollar. I don't want to be alarmist, but tail risks are tail risks, but they're not zero. And that's the thing that worries me more than whether we're going to have a recession in the next 12 months. And we did see the quote yippiness of the bond market after Liberation Day. Things have quieted down, but we still have term premia in bond yields that are concerning. And we'll come back to the Fed and the deficit, but at least in terms of the outlook, those known knowns, known unknowns, and unknown unknowns worry me.
I don't disagree with any of that. I pay a lot of attention to correlation structure in markets. There's a traditional American pattern. It's behind the risk parity trade. Stocks go up, bond yields go up at the same time. And so stocks and bonds have a bit of a negative correlation. And when that happens, the dollar goes up as well because capital inflows are coming. And that and its converse are a kind of traditional American pattern. We had a somewhat different pattern in the Carter period before Paul Volcker came into office. If you look at any Latin American country, they've got a quite different pattern. It's kind of a submerging, emerging market pattern where stocks, bonds, and the currency all move in the same direction on any given day. We have had a breakout in the United States of the submerging market, emerging market pattern. And that's a sign that we're being seen uh, differently and seen in terms of the kind of risks that you describe. So I agree with you on a period of elevated risk. I think that in some sense, the taco mentality is a little bit encouraging in suggesting that we may have some sweaty palms and there may be some real issues, but that if major problems start to emerge, then actions will be taken and we won't keep digging the hole that much deeper. The only other thing I'd add is I have come increasingly to wonder whether the economy has more underlying momentum and less underlying cyclicality than it used to. The fact that housing is a smaller share of the economy, the fact that inventories are a smaller share of the economy, the fact that services and bits are a larger share of the economy, the fact that the supply of credit comes from many more sources, and the fact that financially hurt institutions, financially hurt people are more able to borrow and keep spending after they absorb a blow than they used to be. All of that imparts a kind of underlying momentum to the economy. And it's worth remembering that it's been 35 years since 1991, 34 years. And we had a recession when we had a incredible bubble that burst with the NASDAQ. We had a recession when we had the wholesale massive over leveraging of of major financial intermediaries, and we had a recession when we had a pandemic. But in more than a generation, it's been three recessions, each with a large event behind it. And I think that's just worth
Yeah,
keeping in mind in forming judgments.
I agree. The one thing I would add to that is the role of uncertainty for business people that may make this cycle, if you will, a little different. Many business executives I speak to are delaying anything they can until they figure whether it's a capital project, employment project, M&A. that's not healthy either. So we'll see, I suppose, as the tariff situation clarifies.